You can hear me? Some people are waving hands. Instructions, comprehension. Good morning once again, and thank you for honoring our invitation and coming to the dissemination of the financial strategy 2025 to 2030. Now, I believe when I look around this room that this is the perfect mix of people to have this conversation. And what conversation are we going to have today? A conversation that we hopefully will give us answers to the direction that our country, Rwanda, is taking in regards to being an international finance center. So once again, I want you to clap for yourselves for making the time to be here this morning. The people who have made this possible, they asked me not to honor them, but before we start the conversation, I want us to put our hands together for the Minister of Finance and Economic Planning for ensuring that we are here and this happens. I also want to put our hands together for development partners such as the MasterCard Foundation that have enabled this. And for ourselves for taking time out of our very, very busy diaries to be here this morning. Without any further ado, allow me to introduce Mr. Elisi Kamanzi from the MasterCard Foundation to give us the opening remarks.
So, thank you again. Good morning. Good morning. Oh, I like that. Dear guests, Honorable Deputy Governor of the National Bank of Rwanda, dear dignitaries from different government institutions, CEO and leaders of financial institutions, regulatory bodies, representative of the private sector, development partners in the room, ladies and gentlemen, all protocol observed, good morning once again. Feels like the room energy is so low. But hopefully as we move into the conversation, the room will feel much more vibrant. On behalf of the MasterCard Foundation, and on behalf of the country director who was not able to make it because of prior commitments, it's really a great pleasure and an honor to welcome you all to this important discussion as we gather in the room to discuss and to be revealing the Rwanda financial sector development strategy. That is a roadmap that is going to be guiding us between now and 2030. So this event is not a usual one. It's a significant milestone, but not only for people concerned by financial sector. It's an event, it's a milestone for policymakers, for regulators of the sector, the financial sector development sector, but it's also a milestone for the private sector that looks upon the financial ecosystem to grow, to start businesses, but also to expand just beyond the boundaries of our loved country. Let me just retrace the history a little bit. Over the last few years, Rwanda as a country has really registered significant growth. When the financial sector is concerned, growth was accompanied with resilience. And that has led to significant progress when it comes to financial access. Not long ago, we were also gathered under this roof, in this same room, if not the next door, to witness the first of its kind MSME Growth Symposium. Under this MSME Growth Symposium, we also presented the FinMap. The FinMap, and beyond that, also the financial sector committed under the theme Finance Engage. A few encouraging figures were presented as well, whereby 96% of Rwandan adults are able to access a certain form of financial services. Beyond that, it was significant to observe the jump that was realized to achieve that milestone. Not later than 2020, the same level of access was only at 89. From 89% to 96%, that is really what we call progress. And it's progress the Rwandan way. It's not just a small jump. It's a jump towards universal financial access. As part of the MasterCard Foundation partnerships with renowned organizations like the Rwanda Development Bank, we have launched initiatives like the Kataza initiative that seeks to not only advance financial inclusion to the most marginalized, but also seeks to modernize it through digitization. We also have partnerships that are focusing on the underserved, like the Rugori Fund that is implemented by the Rugori Investment Network, which seeks to advance financial services to rural young women who normally face additional barriers when it comes to accessing finance. But that is not alone. We also partner with ecosystem strengtheners, like Access to Finance Rwanda, to avail data so that the sector can grow together and leveraging insights so that growth doesn't leave anyone behind. As we celebrate that significant achievement, we also need to acknowledge that the FinScope 2024 has revealed also significant gaps when it comes to meaningful use of financial services. And that says that access should be deepened and followed by meaningful use, but also really growth if we aspire to become a resilient economy. Let me just also portray a few numbers just to show that work still remains to be done. As we speak right now, about 65% of adults, Rwandan, are able to access formal financial services. But if we translate it into the the MSME, micro, small, and medium enterprises access, only less than a quarter can access formal credit. That means that we cannot be rejoicing more today to have the financial sector development strategy being unveiled and presented because it's so timely. It also shows that Rwanda as a country is up to a bold ambition. But I want also to insist on one fact. I've spoken about numbers, but numbers are not just numbers. We are talking of physical human beings. We are talking of achieving goals that transform individual lives. And when I talk of those lives, I'm looking at a smallholder farmer who seeks to just access maybe insurance services for their harvest, just to say the most common. But I'm also talking of cooperatives that seek to buy value addition equipment. How about startup funders who need financing to also venture into the most needed solutions that we normally call businesses? But I'm also at the bottom line looking at a young professional who has just started their employment career journey, and they are looking for a future plan, a retirement solution. And that is where pension funds come in. I want also to come back on the FinMap. The clarity that it has provided is that there is still a gap between the demand and the supply of financial services. And that is what the financial sector strategy seeks to bridge. And as stakeholders gathered in this room, we believe it can only be possible if everyone plays fully, but intentionally, their roles. And that means we want to ensure that not only financial service provider, commonly known as banks, but let's just expand beyond that. Let's look at pension schemes, capital markets, even insurance providers. All that needs to really play in synchrony as an orchestra that is well governed if we want to see transformation happening. I know there's nothing that is impossible when Rwanda commits. And I'm looking forward to the stakeholders in the room joining hands, but also committing to making the financial sector development not only just a document, but something that is creating path to an inclusive transformation. As the Mastercard Foundation, we believe that access to finance is one of these enablers that can create impact at scale. And through our country strategy, we have anchored it around MSME growth and entrepreneurship because we believe these are the holders of potential for creating work opportunities for young people, but also adult Rwandan. And this should be sustained through resilient growth, intentional investments, but also synchronized effort. If we want to make it happen, we need to be an orchestra rather than individual solo players. So as I tend towards the conclusion of these remarks, I want also to recognize the important role played by the government stakeholders through the Ministry of Finance and Economic Planning, because bringing us together is what will make it possible. Let us move from merely providing access to finance to expanding and deepening inclusion so that impact doesn't leave anyone behind. The Mastercard Foundation will remain committed. We are going to continue supporting the actors, putting forward inclusion into the work we do, but also mobilizing stakeholders as we have been doing in the past so that we can achieve this collective effort, which is economic transformation. Dear participants, I'm looking forward to an amazing and engaging conversation, and I thank you very much for making time today. Murakoze cyane.
Questions, questions, questions. It leaves us with lots of questions. Now, the famous poet, Tupac, has, in one of his songs, he has a saying that men lie, women lie, but the numbers don't lie. So those numbers that are going to be shared today are going to leave us with lots of questions. How do we solve for these questions? How do we get more young people and women access to formal credit, as Mr. Kamanzi has put it? So without any further ado, allow me to introduce the person to give us our keynote address. He is the head of the financial sector development at the Ministry of Finance and Economic Planning. Let's put our hands together for Mr. Herbert Asimwe.
Thank you very much, Arnold. Deputy Governor of the National Bank of Rwanda, CEOs and MDs of financial institutions present, development partners present, distinguished guests, ladies and gentlemen, good morning. Good morning. It's an honor to be here today representing the Minister of Finance, who is not able to make it today morning due to urgent duty calls. But he trusted me with this responsibility to really address you. Thank you again for honoring our invitation to be here for the launch of the third financial sector strategy. As you all know, we have had the first two generations of financial sector strategies. One looked at, setting the right legal and regulatory environment for the country. And the second looked at, pushing in more products and services that Rwandans needed to thrive. And this has been achieved. This strategy comes to reinforce what we've been able to achieve and take the financial sector to another level. But allow me to, speak into a few things that we've been able to achieve that you all know. The first, I'll talk about the Kigali International Financial Center. This was a baby born out of the first two strategies. And today, KIFC is a thriving, strong, third financial center in Africa. I can't fail to mention that we have strong financial institutions, very well capitalized banks, very solvent insurance companies. And again, thanks to you, and thank you for supporting to implement the past two strategies. I'm happy to report that the Umrenje circles that you all remember as manual financial institutions are now using IT systems, are now digitized. If you go into your Umrenje circle, you're able to bank through a core banking system. And again, thank you for supporting that. We have the National Agriculture Insurance Scheme that is helping to de-risk the agriculture sector, that our population, 80% of our population is involved in. And this de-risking has allowed you to push money into that sector. Allow me also to mention the Ejo Heza scheme. This again was birthed out of the first and second financial sector strategies. And today, Louise will bear me witness, it's over 70 billion francs. We have achieved a lot, but allow me to mention that we still have a couple of areas to improve, to work on, and allow me to touch on them. The first is the low level of savings that has affected the long-term finance that we need for our private sector. We have short-term funds, and this is because we don't have these long-term savings. We need to really put a lot of efforts into this. The uptake of formal financial services has to improve. We have more people, we still have more people uptaking informal services, and this puts them on the edge. In case they drop off, they go back into exclusion. So we really need to work on that. We need to push money into key sectors. Entrepreneurs are looking for money. SMEs, MSMEs are looking for money. And when we discuss with them, they are looking at more than debt. Debt is there in abundance, but they are looking for long-term finance that is affordable. They are looking for silent capital out here. There are sectors that are still knocking on our doors that we perceive risky. And allow me to mention sectors like the mining sector. We need to develop products that really suit them. We need to understand them and serve them. The trend today is that they get money from outside the country, which money also dictates how they price and other dynamics around the mining sector. It's important for us as the financial sector to understand them and be able to serve them. The cost of intermediation is still high. People from the fintech payment systems understand what I'm talking about. It's important for us to really look into that. With these remarks, distinguished ladies and gentlemen, allow me again to thank you for being part of this launch today. And thank you for considering to be here today to witness what we've prepared for you. I do not want to preempt what is going to be presented. And with that, allow me to thank you.
Mr. Hubbard, please don't sit down, come back. I think it's best that you introduce the people who are going to set the pace for the rest of this conversation.
I will honorably do that. Thank you, Arnold. We've been working with, we chose one of the best, and we chose MasterCard to undertake this responsibility. And we've been working with them for the last, is it 9 months, 8 months? We pushed them back and forth, but eventually they came up with very good products. And they have a very, very, very good product for us today. So allow me to invite the head of strategy for Africa for PwC to come and start the presentation. Thank you.
Deputy Governor, distinguished guests, please, I do acknowledge and hope all protocols are observed. My name is Kesh Naidu. I'm the head of strategy for PwC in Africa, and it's an absolute honor for us today to present the financial services sector strategy up until 2030. The process to date has been exceptionally collaborative, and what you're going to hear from us is a snapshot of the strategy. We attempt to actually walk the journey with you in terms of not just in who was involved, but some of the insights of the strategy. But if I can start, is the strategy is exceptionally an in-depth document that covers a multitude of elements. So what you're going to be seeing here today is merely just a snapshot, but we will walk you through the insights and the basis upon which the strategy was defined, but also the actual initiatives. To kick things off, hope this works. I just want to set the tone and the agenda that we will cover to give you guidance on how we will navigate this discussion and the depth that we will get into. The remaining components of the detail does sit in our report, which you can read in terms of the ministry's website. We'll first ensure we set the scene. I think the speakers before me have adequately narrated and captured some of both the achievements and problems that need to be addressed. But also, we want to ensure that everyone has comfort in terms of the alignment on the bigger picture of the vision for Rwanda and how this strategy plays into that, which is an incorporated and critical part of how we move forward. Two is, we also want to ensure the key strategic highlights are defined. We have developed a strategic framework that covers both the pillars in which the strategy is based, but the strategic initiatives that the strategy unpacks, and this goes down to a sector level or subsector level. And then finally, we will unpack the implementation plan and the monitoring and evaluation framework that has been used and the way forward. This, once again, represents a snapshot of the strategy, of which the detail sits in the report I've presented. But let's get into it. Firstly, the architects of the strategy is certainly not PwC. It is almost many of you, if not all of you in this room, in terms of the consultation that's happened. This is a co-creation of several months' worth of work across a number of institutes and organizations and bodies, all the way from the ministry through to the National Bank of Rwanda and many other institutes and organizations that are up on the slide, including the development partners of MasterCard and the World Bank. It was highly consultative, and it's why this program has taken several months to ensure there's alignment. The list is not exhaustive. There are other organizations and individuals that have contributed, but we just wanted to frame this up front in terms of the inclusiveness of the engagement and the dialogues that have happened. I will explain to you the process that we've gone through to conclude on the strategy and some of the feedback that we've received. The presentation team, I think, as Herbert has highlighted, is in collaboration with both Micofin as well as the MasterCard Foundation in terms of Livingston, who's here today. But from the PwC team that you'll see presented up here today are all our specialists across the spectrums of technical insight that are defined. Arthur, Nitin, Janae, and Jackson are part of the team, and they'll be coming up and presenting as we go through this from the depth of the insights that need to be shared. So let's set the scene. Firstly, acknowledgement in terms of the achievements to date. I'm not going to repeat what some of the other speakers have already highlighted, but the basis of the strategy does not start from ground zero. There's already an established success track record that the financial services sector in Rwanda has been able to achieve. And they sit largely in 5 key buckets, but this is not limited to these specific areas of success. One is the absolute increase in financial inclusion from 47% in 2008 to a significant growth up to 92%, and as well as surpassing the NST1 target. It has to be acknowledged that the rate of acceleration in terms of financial inclusion has been phenomenal. The question now is, can we leverage and capture that for further significant growth? And these are some of the challenge questions that the strategy will have to address in terms of the next stage and the next era for this specific strategy. If we look at the sector growth on point number 2 there, in terms of assets, the compounded average growth of assets have grown by 18%, including return on equity in both banking and insurance, in terms of 25% and 20% in the insurance sector. This is significant. And to investors, it does signal an opportunity for growth, which is fundamental to the strategy of the financial services sector. Digital transformation has been spoken about quite significantly, where we acknowledge the focus and penetration of mobile money up to 86%, including eCash and the interoperability components of that. And we've listed components of RIPS in terms of the upgrades that have been taking place, but also what lies ahead. In terms of digital currency, Rwanda remains focused on executing on the leading edge of some of these components, including the pilot which is underway. And that's key in terms of being amongst the leading organizations and institutes playing in the space. The regional hub has been listed already as ranked number 3 in Africa. Casablanca and Mauritius remain 1 and 2 in Africa, and that's quite a significant achievement considering the basis that you have come from. Now the message is, where to from here? But all of that is great in terms of acknowledging the achievements. The question is, how do we navigate into the next era of growth? And though the slide is busy, what it's really positioning around is what is envisaged for the sector. If I can summarize it, if you look at where we stand in 2024, the sector currently contributes 2% to GDP. the ambition really is to get the financial services sector up until 12% in 2050. That is a 6 times growth story that is fundamental not just to the economy, but to the way you tell your stories to shareholders and investors. That is really an anchored discussion of value. And this is what the strategy ultimately aims to address is how do we grow the financial services sector from 2% where we find ourselves today to 12% in 2050. That's basically 6 times value, which to shareholders is really an embedded and anchored investment case. What does that look like in terms of all the economic modeling across different sectors? Is the emergence and growth of financial services, both across banking, insurance, and capital markets. The contribution to both GDP and a number of other KPIs is significant across the spectrum. But what's key here is not just the numbers, but the strategies that will be required to deliver on this. And this is the substance of what the discussion is about today. I'm not going to over-present on this, but just understand all those subsectors that sit in the slide really reference the contribution of each of these subsectors to the growth story that we're about to explain. And we'll share some of the key targets that each of these subsectors need to focus on in order to achieve this, which is sitting in the detail of the discussion. But having a vision is one thing, and what's important for us is that this strategy here is aligned to the 2050 vision that has been set at a country level, both from an aim perspective in terms of the upper to middle income focus by 2035, as well as from the foundation on NST2. The alignment to these strategies and visions is critically important in the way the strategy is designed, but also addressing the key problems. And for those of you who are reading it up on the slide, you can see, though we've articulated a single problem area, there are multiple problem statements that need to be addressed. You will see amongst the problem statements are 4 key areas and 3 cross-cutting problems that need to be addressed. One is savings and investments. I think this has been highlighted. The current savings levels at 12% need to be accelerated up and above 25% in the journey ahead of us for the strategy. That has to be fundamentally addressed in order to kickstart and drive growth to the level of what we're talking about, which is 6 times growth in 2050. If we look at fintech and innovation, there's a key need to ensure from both a regulatory perspective, compliance and licensing regime, that we start to address these factors to, one, open up the number of players that can enter these spaces, but also to create trust around the regulatory environment in these specific sectors to explore and scale innovation. The third one is around inclusion and access, which Herbert has covered in terms of the details around it, but really ensuring the unbanked and underbanked populations are really there to be able to, for us to scale it. And in order for us to do that, we're going to have to really look at how we address segments of the population to bring into a bankable component of the industry. And lastly, on capital markets, though we've highlighted the problem statement on shallow capital markets, the way in which we go about listing, digitizing the listing, and scaling the products that are available in capital markets are pivotal to ensuring we create depth in this space. These elements here will be touched by the team as we go through each subsector. So don't feel like we have underplayed any of these. The details will play through in the next few sections. The cross-cutting elements sit in financial literacy, infrastructure gaps, and skills gaps. These elements here will be unpacked in detail for each of the sectors that we see ahead. But across them, we see from financial literacy to skills gap, a consistent message across each of the sectors. What was the journey that we followed? And I think this is important in terms of the collaboration that we looked at. Firstly, the level of engagement that was played through in this journey covered a number of stakeholders, which you saw on the first slide that I presented, but it went down to the sub-sector levels, including very senior individuals, some of you in this room, in terms of the engagement process. But also we consulted through the usage of workshops, interviews, and in cases where we weren't able to engage in workshops, we did have written consultations with some of you in the room today, and those that may not be. Lastly, on insights and alignment, we've brought and used various global business cases to show both lessons learned and opportunities to identify ways in which this strategy can be scaled, challenged, and tested. And ultimately, there's been strong alignment with various stakeholders across this process. It's why it's taken us several months to align not just the strategy, but the monitoring and evaluation framework, which we will present to you today. And then finally is the ownership component, which is the ability not just to define a strategy, but to execute on it. And we'll highlight to you later on in the presentation the governance structure that supports this initiative and not just the strategies at play at the moment. So before we jump into the actual strategies, this entire framework or strategy is based on a strategic framework developed to ensure we can unpack the strategy in a logical manner. Firstly, there's a defined vision that has been set up and agreed amongst various stakeholders to ensure we focus our efforts on what is the intended outcome at a vision level. The purpose is well defined, but also links into the 2050 vision for the country. And that was important because you cannot have a strategy that's misaligned to the bigger picture. What I will touch on is some of the design principles. There's 6 of them there in terms of the focus upon which the strategy was designed and stress tested on. One is access and ensuring the universal financial inclusion. That is something that's quite important, especially in some of the gaps that we've identified. 2 is depth. By increasing the depth of the financial services sector, we'll get the multiplier effect in terms of value, and that will be played out in some of the strategies that the team will discuss with you. Efficiency, stability, integrity, and consumer protection are the other elements upon which the strategy was built. These design elements are all factored into some of the work that you'll see the team will explain shortly. But from a framework perspective, there are 2 aspects upon which the strategy is built. One are the key pillars. The key pillars lie on trust, engagement, and accessibility. We focused on trust to ensure not just confidence in financial services products, but safety. You've got to create an environment where if you're going to bring in new participants and the investment that is coming in, we've got to make sure the environment can be trusted in order to be scaled and to adapt to long-term investments. 2 is the level of engagement, which includes the awareness and education around financial services products. And 3 is the accessibility, making sure that these products or services that we want to offer in order to scale speak to different segments of the population. So as we present, you'll see these 3 key pillars play out together with supporting pillars and enablers around skills and then bridging the skills gap specifically. There are 7 distinct strategic priority areas or sectors that are defined, together with 2 enabling areas. These sectors are listed on the outer circle, and then the enabling sectors or initiatives sit within KIFC and sustainable finance. All of our initiatives that are going to be discussed with you today in terms of the detail, and this is really the last slide in terms of framework, follow 3 distinct tags or thematics. The first is really around building the foundation and fixing the foundation. So there are some elements in some of the sector strategies that we need to address from a foundational perspective. 2 is identifying opportunities that we can scale within the short to medium term, and 3 is identifying those that will create diversity and acceleration. Across all of these are game-changing initiatives which you will see that the team will focus on. At this stage here, without taking further time on explaining the framework, I do want to hand over to Nitin and Janae, who are going to walk you through the detail. And the devil does sit in the detail, and this is where we want to get in terms of insights on the strategy. Nitin and Janae, let me welcome you up to present this section.
Merci Kesh, bonjour tout le monde. As many of you know, my name is Nitin. I've met many of you during the engagement session. I'm based in Mauritius, that's why I'm French. My main work today, or assignment today, is to explain to you the strategy by sector. So the document that we've prepared, in fact, has got strategy for each subsector. So the way it's been structured is that if you remove each subsector section, you actually get a separate strategy for the sector. So I'll take the capital markets as an example to explain how the strategy has been built and the structure of the report. So there is a first component that talks about the key gaps. All these gaps have been built based on data and the current state assessment report that was prepared and submitted as a pre-document to this strategy. And the gaps have been identified on each of these distinct elements within what Rwanda has achieved and what has success looked like so far. What we've also done is that for each subsector, we've identified and highlighted the key strategic objectives, which are very important. These objectives have been further than defined in terms of specific M&E and targets, which will be explained later in the presentation. But this is the second block of the structure of how each subsector strategy has been developed. And then the final block that you see there around the pillars, which Kesh has just explained, talks about the trust, engagement, accessibility, and the cross-cutting ones are skills and literacy, which is very important as one of the enablers that will drive the strategy forward. Now, this structure is the same that we've used for all the subsector strategy. That's why I spent some time on it. Moving specific to the capital markets one, one point that I'd like to highlight is that there's no one sector which is more important than the other. But it's very strategic also to understand is some sectors have got a more catalytic role when we talk about investments and savings. And one element to take into consideration is that when you talk about savings and investment, the local saving is not the only element that will drive the investment for the country. We need to look for investments from outside the country. And the capital markets can play that catalytic role. If you look at the capital markets, there are three distinct areas within the capital markets. One is the debt capital market, which have got some specific gaps in terms of the primary and secondary market activity, which is very low. The equity capital market that has got limited number of listings, for example. The asset capital market where the investable assets are quite low. So how do you grow that then? That's the main gap. I won't go into the skill because there is a cross-cutting and I'll cover that at the end after I cover the sectors. The objective have been set. The first one is how do you increase the number of listings that will create liquidity? And that liquidity then will drive more investments in the country. The second one is how do you increase market capitalization and private debt as a percentage of GDP? Because on the capital market, there's also debt product like corporate bonds that can be listed. So that's the debt aspect of it. The third objective for the capital market is increasing the AUM as a percentage of GDP, which is quite low compared to peers within the region and comparing to other developed countries like, for example, Singapore, which is one of the countries we've tried to benchmark and get the best cases from. Increase in terms of FII, which are the financial investors, institutional investors owning in the capital markets. So yesterday we had an interesting conversation. Can investors from the foreign markets invest in USD, in foreign currency in Rwanda? In fact, you can, because this document has been prepared and it's a live document. In parallel, there are many initiatives that are already being implemented in Rwanda today. So in 2025, the capital market framework has now enabled that USD listing can happen in Rwanda, which then can attract foreign investors that come and invest in foreign currencies. Increasing the overall FDI in the capital market is another element around that. So how do you use your capital markets then to channel investment into the country? And the last objective is increasing the number of SME listing in the capital markets. So SMEs can have access, like Herbert was mentioning. Debt is one instrument, and the banks can offer debt. But if you look at the listings of other markets, then the capital market is also used from having different listings specific for SMEs. Where the listing rules are different, it's more aligned to what SMEs and MSMEs are trying can raise to raise capital. Now, I've spent some time to explain the structure. I won't be able to go through each and every detail in all the subsectors like this. I'll try to cover the highlights. I've used the capital markets as an example. And to move into now the last block of the initiatives. So the document has a list of, I think, 100 odd initiatives, which is a lot. What we've done here, we've highlighted the ones that are game changers. So there are some initiatives, if you start by implementing those, that can really change how the financial services sector creates that depth into not only the financial sector, but also grow the real economy. The first one is around the trust element. So there is an opportunity to list SOEs and green bonds. So accelerating listing of SOEs as a step towards broader economic reform. Currently, there are very limited number of listed companies in Rwanda Stock Exchange. It's growing. We had 2 listings in October in 1 week, which is a very good sign, but then that can grow exponentially. What the recommendation around that is to set up a cross-institutional privatization and listing task force that could include Minecofin, RDB, CMA, and RSC to facilitate and track listing of SOEs. Based on established case studies of countries, for example, Singapore and India, this has been done. And the listing of the SOEs actually bring a lot of liquidity, market liquidity, and attract further listings into the national listing. The second initiative, which is bold under engagement, is actually to enhance market depth by introducing new products, mainly in debt capital markets. Example here is, if you've got any instruments that are more than 5 years, then can you have specific regulation and specific guidelines around that? One example could be to issue sovereign tax-free bonds for participation from the retail sector in national infrastructure and social projects. Again, this has been tested, and this can be used within the Rwanda context because the economy is more stable and then sectors are growing. So then how can you use sovereign, I'll repeat that again, issue sovereign tax-free bonds to drive investment, foreign investment into your national public projects? Another one which is we discussed a lot, and this morning as well we were talking about that, about the Rwanda diaspora. So can you have specific products by issuing for the diaspora USD and Euro-dominated diaspora bonds to finance strategic national projects? The retail profile of these projects can be very interesting. It can be guaranteed by the government and guaranteed by other sovereign institutions as well. So it's a matter of kind of structuring in a way that attracts diaspora funding into the country. The third one is automate all trading operations. So we talk a lot about that. And without having an automated system at the listing, it's difficult to trade because you need real time. And we talk a lot about digital as well. So can anybody sitting even in a village, in an urban area, actually rural area, try to access the capital markets on a mobile phone? One very interesting and very known case study is the case of India. And if you look at the proportion of 1.3 billion people, if they've been able to expand and make listing and instruments available in such a huge market, then it can be done here. So this is where we need to start. The basic here, start by digitalizing the capital market, which is today mainly at a very best semi-automated or manual. So these are the three. I won't go into the skills and literacy because they are cross-cutting. I'll cover that in the end. This is the structure of each subsector. Again, each subsector now have their own strategy. These strategies have been co-developed by the leaders of these sectors, and many of them, of the initiative, are already in progress, which is a very good sign, which means that this strategy is not only there as a document, but it's already being implemented by the different leadership team in the sectors. Let's see if this works. Okay, I went back. Sorry about that. Can you just... Thank you. Yeah, so let me take the banking one. I won't go in detail as I did for the capital markets one. So same structure of the report is that you've got the gaps that have identified in very specific thematic themes. Access to finance is one of them. Financial sector efficiency and depth. Structural and regulatory is another theme. And then capacity and innovation challenge. The objectives for the banking sector is one, to increase access to banking services. So which talks a lot about access to finance. Increase the depth of the banking sector. So having the sector is one thing, but then how do you increase more product penetration and distribution? Improve efficiency of the banking sector in terms of operational efficiency. So how do you make it more efficient and at the same time reduce the cost of banking? Sound and stable banking sector, which talks a lot about the solvency and which is already being monitored by the National Bank. Safety, safeguard integrity of the banking sector, which is around the reputation of the banking sector, which is very important. Increase competition in the banking sector. So we talk a lot about that. How do you actually invite new types of banks? And there's one initiative specific I'll stress on talking about that. Improve customer protection and improve skills in the banking sector. In terms of the game-changing initiatives, probably I'll highlight, I won't take every one of them. One that I think is very interesting is about licensing of neo and digital challenger banks. So there is already one digital bank or digital structure in Rwanda, but how do you have a dedicated licensing framework about it? So today your existing licensing allows for it, but then if you can carve a specific license for the dedicated framework for licensing and neo, digital, and challenger banks, that can really change the game. This involves developing comprehensive regulatory guidelines, implementing a tiered licensing structure, and streamlining approval processes to attract innovative banking models. The goal is to diversify market players and foster a more competitive and inclusive financial ecosystem. Examples within the African continent, in South Africa, you've got Time Bank. In Nigeria, there is the Payment Service Bank. And in India, which is there they don't have a separate licensing. It's linked to the banking license, where you have Jupiter, which has done very well. So that can be really big game changer, bringing more competition, more access to the unbanked population. The second one is around in terms of engagement, is for how do you increase the SACCO and bank partnership to address the low access to credit in Rwanda, especially, for example, looking at the agricultural sector. A strategic initiative proposes forming structured partnership between SACCO and banks. These partnerships would facilitate risk sharing, enable design of tailored financial products with flexible repayment terms, aligned to agricultural cycles, and include capacity building programs for SACCOs. The overall impact would be increased access to affordable banking services for rural farmers. And the last one, which is around applying big data from an accessibility perspective. So how can you really use big data and behavioral trends that you see in this data to give access, for example, to women to banking products and services. So for that to happen, then there is a specific fintech element that will talk around how you enable this data sharing between technology companies and banks. So this is for the banking sector. For microfinance specific, I think there's been a lot that has happened. SACCOs has been very successful, but how do you scale that? It's very, very interesting to have the update that now the whole SACCOs ecosystem has been digitalized, and then which is a very positive achievement. What we are actually saying to further accelerate that, the first initiative which is I like to stress on in engagement is expedite the digital identity system. I won't spend a lot of time on this one because René will cover that in detail in the payment slide. But that's a very, very fundamental, and countries that have actually enabled that have seen rapid and a lot of progress within the whole payment system and digital system and accessibility to finance. The one initiative that's quite specific is how do you convert the Umwalamu SACCO to a cooperative bank? So converting into a cooperative bank to improve its funding, stability, and access to central bank liquidity and interbank markets. This transition would enable SACCO to diversify its offerings, such as international transfer and trade finance, enhancing deposit mobilization and reduce reliance on external borrowing. The last initiative that I've highlighted there around accessibility is attract new players in the alternative credit market. So your whole credit scoring model that typically we use in banking might not be applicable for all the different types of customers out there. This is where you've got new types of models that allows you to credit score lower end of the market, and especially for SMEs. So this initiative talks about how to access to alternative credit Rwanda should attract more fintechs by enhancing its regulatory sandbox and organizing innovation programs to support new entrants, ultimately increasing the availability of inclusive lending solutions. So this was for the strategy, again, specifically called out for microfinance institutions. Insurance, one of the initiatives, I'll go directly to the initiative in trust, is strict enforcement for the public sector assets. So the regulation is already there. How do you ensure that to ensure fiscal stability and foster disaster recovery, Rwanda should strictly enforce a public asset insurance program by mandating insurance for all public sector assets, supported by oversight from BNR, regulatory audits, and clear compliance guidelines, drawing lessons from models such as Mexico and Colombia. We highlighted and explained in detail how these two countries have done that. The next one is around freelance insurance agents. So in markets, I can relate to the example of Mauritius, where freelance insurance agents have actually driven a lot of adoption and penetration for insurance products. So this model has worked. So how can we leverage on the association and leverage training, making it more kind of structured for the freelance insurance agents to grow. One element which is very important when you have freelance insurance agents is to make sure that you have fair competition guidelines around that, because how do you distribute revenue and how do you compensate people over time, it's something very important as well. The accessibility one that we've touched upon as a game changer is around set up an insurance compensation fund to protect policyholders from insurer insolvency and claim disputes. Rwanda should establish an insurer compensation fund requiring insurers to contribute a portion of premium with a transparent governance structure and streamline claims process to ensure timely payouts and financial security. I'll just take the pension one before I invite Renee for payments. So pension can be another big catalyst within the financial services sector because it's linked a lot to the capital markets. So this is where the capital markets and the pension sector can really collaborate a lot. The first initiative, and this has been pointed out by many stakeholders that we've met, how do you appoint more private asset managers? Engage local and international asset managers to oversee proportion, for example, of our RSSB AUM, adhering to defined investment guidelines for returns and portfolio allocations, with RSSB serving as a seed fund to empower private sector assets. So if you do that, then the seed fund will allow private sector assets to come into the country, then they'll grow that asset. So RSSB then is seeding their funding into these private sector asset managers. The second one is private pension growth. Specific market that we've seen that this has happened with the African context is Ghana, where when the private sector pension scheme was launched, it was practically zero. So today the private sector pension AUM is bigger than the public sector pension AUM. The case study is also something that we prepared for you, and this is a very interesting one. So private sector, I repeat myself, private sector AUM can really grow if you have the right guideline. How you can do that, for example, to strengthen the pension system, RSSB could allocate a proportion of the upcoming 8% mandatory pension contribution to private pension schemes under a defined contribution model, promoting diversification, higher returns, and long-term sustainability, drawing on successful multi-pillar systems like Ghana, Chile, and Mauritius. So these case studies, again, have been provided for you to refer to in the strategy. The last one, which is in the pension one, which is very important, is how to attract large private pension managers and strengthen financial inclusion. One recommendation is for this is to offer incentives such as tax benefits and regulatory support linked to PPP investment opportunities to attract large pension managers to Rwanda to attract FDI. In parallel, ensure the enabling framework such as a tiered KYC requirement and digital financial service infrastructure are constantly applied across the broader financial sector, including microfinance institutions, insurance sectors, and pension schemes. This integrated approach will ensure transparency, reduce onboarding barriers, and promote inclusive access to long-term savings and investment. I'll stop here, but again, why I've stopped on savings and investment again, just to make sure that we take, one element that we take is that saving and investment are related and correlated, yes, but in fact, if you bring more foreign FDI investment, your local savings will grow because then you'll create employment. So we need to look at that from that perspective as well. So that's why, in terms of presenting these sector-specific strategies, the capital markets has got a more catalytic role. The pension sector can enable that. And if all of them collaborate and cooperate, as was in the opening speech, opening note that was mentioned, then really that can change the game. I'll just invite Jenny to cover payments and fintech, and then I'll just give you back for another two enabling sectors. Thank you.
Good morning, everyone. Just quickly, I'm Jenny Fulyon, and I come from PwC South Africa. So I'm now going to chat to you about probably two of the most transformed sectors or subsectors within the FSDS, and that is payments and fintech. And together, both of these subsectors really form the digital heartbeat of the Rwandan financial future. So it's connecting people, it is empowering infrastructure and innovation, and it is really driving the nation's ambition to become a fully digital, inclusive economy, which is very, very important. So the payment sector is really at the center of Rwanda's financial sector, and it is driven towards a cash-light and an inclusive economy. While cash remains common in Rwanda, we all know it has made a significant progress. Platforms like Momo, platforms like eCash have revolutionized access, making it possible for your everyday Rwandans to transact, save, but also transfer funds digitally. What, however, has been a challenge is trust and low access. And that's not only a challenge in Rwanda, it's a challenge in other countries, both in Africa and across the world. And it's now important that we see this as an opportunity. The systems have laid the foundation for a digital economy. It works for everyone, from your urban commercial entrepreneurs to the rural farmers that we were talking about earlier. The next step now is to deepen and diversify this. We go beyond payments, we go into credit, we go into savings, we go into capital markets that Nitin spoke about, we go into investment products. All of this uses digital channels, and thereby we bridge financial inclusion. So another critical area that we've spoken about, and that's been mentioned earlier, was remittance. So for many Rwandans, both domestic and cross-border transfers are their financial lifelines. However, these transactions, and specifically the costs associated with these transactions, are extremely high. So by digitizing the transactions, the remittance, especially the remittance corridors, we can promote regional integration into the rest of the region. We get regional interoperability, and therefore we encourage new entrants. New entrants into the corridors will increase supply and thereby drop transaction costs. It'll be cheaper, it'll be faster, and at the end of the day, it'll also be safer for the people on the street. So across the 5 pillars, there's one or two I just want to emphasize on. We've spoken about building confidence through secure systems and digital identity. So in South Africa, what our central bank is busy developing is digital financial identity, specifically linking digital identity to financial systems, so that you use that as a form of your eKYC, as a form of identification, as a form of access, but also to alleviate fraud. So we're seeing the benefits of implementing a full digital identity system. Then it's about digital adoption, it's about remittance innovation, but also lowering the cost and integrating your payment platforms. Now, with a target of 98% financial inclusion for Rwandan adults, we need to be bold, and it's driven by digital payments as the primary enabler. So the game changers that will bring us and lead to that 98% is all about, as I mentioned, the rollout of digital identity, full payment interoperability, and data-driven regulation. So building on this foundation, we then move on to fintechs. Now, fintechs is the next leap forward. So once we have payments, we now leap further forward to get to fintech, and that will further transform the Rwandan economy, the sector, from a digital user to a digital creator. The innovation has already reshaped the payment sector as well as the remittance, but it's now about diversifying. How do we unlock opportunities to increase credit, or not increase, decrease credit, increase savings, your insurance, your pensions, and of course your capital markets? So about 46% of adults are currently use digital financial products beyond payments. So it's important that this is where this innovation sits. How do we take this innovation to the next level? How do we connect fintechs to the broader financial products and thereby unleash new growth, new opportunities, as well as deeper inclusion? The fintech sector we've seen is also a driver for job creation as well as GDP. So by 2029, we've set a target to say we want to reach 4% of contribution to GDP and create about 7,500 jobs. Now that can be powered by local talent, startups from the local market, as well as cross-sector collaboration. Some of the key initiatives we need to consider and look at is through APIs and open data frameworks. So we uplift, we get fair competitive standards, and that feeds into that regulatory environment in order to improve access to funding, to bring and make the market open for other players as well as lucrative. And then the last thing, of course, is about the accessibility, making sure that the technology is accessible and integrated enough. So some of the cross-cutting themes here that we'll discuss is open data ecosystems. That is extremely, extremely important. Cross-sector regulation, so that it does not only get used within one specific sector, but across all of the sectors. And something else is, of course, the public-private innovation labs or innovation hubs. Again, referencing the Reserve Bank in South Africa, they've got a regulatory fintech sandbox within which the players can come and play and test various initiatives to see how it works, what the impact will be, and then making adjustments as they go further. So the key thing is that all of these things will position Rwanda really as a fintech leader. And there will be innovation, but it's not only innovation, it will also encourage it as well as institutionalize it. So between payments being the gateway and fintech being the accelerator, together we can drive the 98% inclusion for adults as well as the 4% GDP contribution for fintech. The last thing, in order to sustain momentum, we also need a strong engine for investment, a platform that attracts capital, anchors innovation, and connects Rwanda to the global markets. And for that, we of course have KIFC. Got to hand back to Nitin.
Thank you. I'll just cover KIFC and sustainable finance quickly, because the reason why we've called out these two as, it's not really sectors, but it's enabling pillars within the financial ecosystem. One is KIFC. It can really drive the economy and the financial services sector forward. Quick example, without going into the specific initiatives. So Mauritius, before the International Finance Center, Mauritius was there. The contribution of GDP in Mauritius, or the FS sector, was 4%. Today it's 12%. So that's what, and looking at that, it's not only that the financial sector drives the sector itself, it's created lots of employment around the sector. So that's one that I would like to highlight. The second one, I'll just go quickly in terms of sustainable finance, where I think there's a lot of potential. This is where sustainable finance as a framework, it's not a sector, it's more a framework, can enable the capital markets. One initiative I'd like to call out here is the blended finance deliverance framework. So how do you use blended finance to increase the availability of liquidity in the market? You already have a very good case study in Rwanda, which is quite unique, which is the Rwanda Green Fund. So the Rwanda Green Fund has been established over the years, and it has mobilized to a tune of $300 million. So how can you use that knowledge that you have now to blend existing traditional instruments towards funding? One last element around that I've said at the initial capital markets slide is skills and literacy are cross-cutting. So skills is one of the gap that we really need to look into, and we'll cover that again at the end. But just to tell you, if you look at Singapore as a model, which is quite unique and it's developed skill well. So in June 2025, Singapore has reached a population of 6.1 million people. When it started this whole journey, it was only 2 million people. And the GDP today of Singapore is 500 billion USD. So how have they done that, and how has importation of skills helped to do that? That's why we talk a lot about importing skills within the skills framework that we've developed. So there's a specific framework for skills development for Rwanda in our report that talks about that. Final slide for me, just to bring together all these initiatives, which are the game-changing ones. These game-changing initiatives, in fact, they are all foundation, most of them, 90% of them, are foundation-level initiatives. So if you are able to accelerate these initiatives and make sure you get that right, then the impact and that 12% target can be achieved much earlier. So that is what we think. But it all depends. Now, there's no, the task force that we'll put together to achieve these or to implement these initiatives are going to prioritize and make sure they are implemented. But this is where the success will be. How do you execute them? All of them are foundation level, as I said. It's a matter of just putting them into practice. Thank you very much. I'd like to invite now Arthur, who's going to take you through the monitoring and evaluation section.
Thanks, Natine. As he said, I'm Arthur, PwC Gasabo. I have less than 5 minutes to take you through these few slides, and before Arnold starts looking at me badly, I'll run through them very fast. So basically what we try to do is build on lessons, as Herbert told you. This is a third iteration of the financial sector strategies, yeah? We had FSDP 1, FSDP 2, and now we're transforming to the financial sector strategy. When we're building the M&E framework, what we saw, one of the lessons that we built from the last strategies was there was not enough effort to strategically align the strategy to the EDPRS2, NST1, and NST2. So what we have done this time is try to ensure that all the outcomes that you see in the last column fit back into what we already have. Those that are familiar with the NST2 know that today, under the economic transformational pillar, which is fully aligned to Vision 2050, we have that resilient and broadening the financial sector. And we're trying to drive that through two things. One, private sector investment and increasing savings across the board. To get to those three things, we have those three priority areas that we are trying to strengthen. Domestic savings, positioning Rwanda as a financial hub, and accelerating access to finance for the private sector. Those get broken down into these, 8 outcomes that I will not be able to take you through right now, but I said go one by one. So the M&E framework is quite a massive tool in there. That another thing that we're trying to build is not look at the monitoring and evaluation as an accountability tool, but rather a learning tool. So having worked on previous evaluations for the financial sector strategy, what we found is most of the other strategies simply had policy actions, output statements, but did not tie down to what are now those fundamental outcome indicators, and that is what we try to pull out here. So the massive M&E framework has about 194 indicators, but here we're only highlighting for you key performance metrics that we'll be going by as not Ministry of Finance, but all the actors in the financial sector will take you through the governance framework. So if you look at the national savings, the strategy to save, we have that outcome around reducing the dependence on external. So it's not just about us saving for the sake of saving, but how can we as Rwandans drive our own economy through our savings that we put in our pension funds, in our capital markets, and the different instruments that should run the economy. Then we look at the financial inclusion. I think one key point that has come out from the preceding presenters was we've done a lot. FinScope tells us we're at what, 96, 98%? But when you think about, okay, what does that actually mean as presented by MasterCard at the start, is how is the population using that platform, all those platforms that have been provided to them. And that's why the indicators this time are not only looking at, yes, we will retain that number one indicator, the adult population, but those transactional accounts, those adult, the mobile wallets, how are they actually being used? What our metrics telling us with regard to insurance penetration and the like. That's what we look at under financial inclusion. Then under the technology aspect, I'll not take us through everything, but we're looking at basically saying how do we leverage fintech to contribute to our GDP. I'll show you the ambitious target, which I'll let my colleague talk to how we get to the last part. The last bit is around, as we build this financial hub, as we position Rwanda to be a financial hub, how compliant are we? So we build indicators into that were not in previous frameworks to say there is what we call the financial task force, which is a global framework. There are 40 indicators in there. How are we performing against them to make sure that we are compliant with what our investors or our potential investors that would like to attract see in the economy? The other four indicators, again, four outcome areas. One is around building partnerships, sharing knowledge. This is fundamentally where we see the role of KIFC coming in, bringing in those foreign investors. And what we are looking at there is, as a key indicator, is, for example, the total investment registered, as well as the ranking of KIFC that will tell us that we're on track to delivering what it is that we intend to do together through this financial strategy. Capital markets, I believe that has been touched a lot, as well as the last two indicators that I think what is new for me here, or new for us in this strategy, is that emphasis on sustainable financing. So we know that is the direction that the globe is taking, and Africa is well positioned to be, I'll call it the poster child for sustainable financing in action. So given our identity as the financial services hub, we see the potential to also serve as the sustainable financing hub. So looking at things like green financing and all relevant frameworks, we are going to see how do we measure progress towards achieving that. In a snapshot, all those 8 outcome areas are going to give us 4 critical areas. So if you recall the 4 problems, the problem statement slide presented by Kesh at the start, it was around those 4 areas: savings and investment, inclusive access, capital markets, and fintech. Under each of those areas, we, together with those, the architects that you saw, BNR, Ministry of Finance, and all the different actors, came up with those targets that also tie back down to what we have in our path to Vision 2050. So these numbers are not just hypothetical numbers that we have in there, but they tie, we've done a lot of financial modeling to see where do we need to be in 2029 for us to hit that upper middle income target of 2050. So just touching some of the key outstanding targets that we have in there. For example, if we're talking of fintech contribution to GDP, we are looking at 0.9 to 4%. That's about a 345% increase. I hope the panels that are going to come next help us tell us how to get there, because those are pretty ambitious targets, and we know who we are. We are Rwanda, we aim high. So join me in that journey to those targets. The last part of this presentation is around the governance framework. So there's nothing really new about this, because we are still going to build on what we have been doing through the FSDP 1 and 2, but this time trying to say, how do we add another layer of, we have the task forces, but you also have those technical working groups that will work on those thematic areas that were presented by colleagues, things to do with skills and literacy, things to do with sustainable financing, financial inclusion, and different areas that will serve as the enablers. So we'll not only focus on someone saying, yeah, we are in charge of the capital markets, but also how you're dealing with the skills and literacy. So we have task forces that we have introduced as a team with the Ministry of Finance and the Central Bank and other actors to say, how do we deliver against this? And at the center of it all, we'll have the Financial Sector Development Department, Herbert's place in Ministry of Finance, doing the overall coordination and monitoring of whatever we do. And that's why I go back to the fact that this is not just an M&E framework, but we must look at it more as a learning and accountability tool that should help us get to our vision. Allow me to invite Kesh to do the concluding remarks from the presentation. Thank you.
So we are at the end of our presentation. And what I want to highlight to everyone is this strategy is bold, it's direct, and it's a signal to both local and foreign investors that Rwanda's financial services sector is serious about growth. And that you can see in how the strategy is designed. In many of the components the team has spoken about, you would recognize these targets are challenging. They're not just ordinary targets that we're going to get done and sit back and celebrate. They require significant energy, effort, and collaboration. The strategy is broken down into 4 logical components, if I had to simplify it for you. We've identified where the gaps are and explicitly highlighted it by sector. 2 is, each component of the strategy is broken down by the pillars we discussed. From trust through accessibility, skills gaps, literacy, it's all defined there in a quite a uniquely defined way, but also very clear. 3 is the monitoring and evaluation framework. It's not just about defining the strategies, how will you measure it? Has been clearly articulated by Arthur. And the 4th layer is the governance structure that needs to exist to execute that. So the key hygiene factors for the strategy have also been designed and set up in terms of the way forward. But in any specific strategy, the ambition might be ambitious. However, strategy really lives in execution. And this is probably some parting insights and perspectives from us in terms of large-scale, industry-wide, sector-wide transformation. There are 3 critical success factors we wanted to leave you with in order to remain sober but ambitious at the same time. They sit in 3 distinct buckets. Firstly, the ability to develop, grow, and attract adequately skilled resources and create capacity to execute. There are 2 components there that we wanted to highlight as a critical success factor in the first box. One is the skills needed to execute the strategy may exist today, but may not exist in quantum in terms of volume of people to execute this. Or some of these skills may not exist, and we may need to get certain individuals from outside of the country or track them into the country in order to execute on the strategy. And that is something you would be challenged with as you go along, because some of the initiatives and strategies proposed require a different blend of skills and capacity to come in. 2 is the effective governance structures supported by execution mandates. Now, often what happens in large-scale industry-wide or sector-wide transformations is governance structures are put together, but the decision-making mandate that goes with that sometimes are misaligned. So often, the more senior steering committees are then asked to execute and make decisions. And this is something we've looked at in terms of the governance, and also recommend that the mandates are very clear in terms of execution, because you do not want to get stuck in continuous decision-making cycles, because progress is ultimately the fuel that will move the strategy to the outcome that you want to achieve. And then the last component is the impact through a defined monitoring and evaluation framework. So monitoring something is good, but you want to ensure the outcome is achieved. And I think you can see that in the monitoring and evaluation framework, that it has been designed through midterm reviews and end state reviews in how you would actually engage, one, in measuring not just the progress made, but the impact and outcome that will be delivered, but also realizing that a strategy is a living document. You will need to adapt as you go along, and that's where the governance structures really come along. On behalf of the PwC team, I do want to thank both the Ministry and MasterCard Foundation for allowing us to participate and be involved in quite an exciting opportunity to develop the strategy. But as I can speak on behalf of our team, we are increasingly excited about the opportunity that sits for Rwanda and for it to really stand up as one of Africa's key growing economies to deliver on the 12% ambition that's been set. We are excited for you, but on that note, I'd also like to ask Herbert if he'd want to pass any closing comments as we wrap up the session. Thank you.
Thank you very much. Another round of applause to the PW team. And again, thank you for the wonderful work that you've delivered. Again, special thanks to MasterCard. Really, really appreciate you for coming through. I'm being corrected. It's MasterCard Foundation. Thank you very much for coming through on this. We knocked on your door and you opened it up for us, and you came in handy with a very good funding for this strategy. And again, thank you to Livingstone for bearing all our burden throughout this work. Now, we are coming to the end of this phase and of the presentation, but we have a panel discussion that we really want you to be part of, and this is where we are going to have experts commit or guide us on how we are going to really put this into action. If you allow, I'll do your job, Arnold. We can take a coffee break, a few minutes. The Minister of Health really guided us that sitting for so long can be equivalent to taking how many crates of beers, cigarettes? So, yeah, let's take a coffee break and come in within 10 minutes and then follow an interesting panel of discussion. Thank you very much.